Jim Harris, National Post. Alliance came out with a report saying a couple decades into the future, rising sea levels, looking at 130 ports around the world, put $28 trillion of assets at risk in terms of climate change. So for the insurance company, even though you have bags of gold, as Paul's saying, at $4 trillion, $28 trillion risk due to rising sea levels just for ports, how is the industry wrestling with this?
Great question. We'll tag that to you, but we'll take a second question and we'll come back. Okay?
Okay, well, I have a question for Sarah. Sarah, as a banker...
Sandra.
Oh, Sandra, sorry. Sandra.
And if you could introduce yourself.
I'm sorry, my name is Mark Pizarro. My company is called Earthforce Drives. As a banker, are you looking at varying the interest rate that you charge clients based on how they stack up in a sustainable fashion in terms of risk evaluation? And also related to that, for Barbara, is your industry looking at differential rates for the people you insure based on their behavior in terms of sustainability and environmental? I asked that question because I heard Lord Peter Levine of Lloyd's speak 3 years ago, and he intimated that your industry was starting to study that, and I was just wondering if in 3 years you'd actually move forward with it.
That's two great questions. Barbara, let's do the ports first. $28 trillion at risk from rising sea level, I guess, from Jim, and then to Sandra and yourself on the second question.
Those are interesting numbers. And what you've got is you've got people who are already living in communities that are at risk. What do? You just can't move them out of their communities. You can't just change the ball game at this point. So what we're doing as an industry is looking at what kind of adaptation mechanisms and initiatives can we come up to help these folks who are there. But there is no magic pill. There is no perfect answer. You know, the next Wilma that hits southern Florida, is it going to be like the last one, or is it going to be more like a tsunami type? It's very difficult for our industry to plan for something of that kind of magnitude. So there really is no answer. There is a lot of collaboration, a lot of research, and a lot of work towards adaptation.
Can I add a little footnote there and then to
Sure.
Michael? Warren Buffett, who's heard of Warren Buffett? Everybody has. With one of his insurance companies, I know a couple of years back, he doesn't speak on climate change very often, but he actually said, if climate change is real, it changes the insurance and reinsurance game overnight.
Definitely.
Okay? Michael, you had a point there.
Yeah, just on harbors, for example, infrastructure is obviously an asset class which is being more closely looked at by large pension plans. And I can tell you that there's a number of pension plans in the Netherlands, and all those folks do their work at about 1.5 meters below sea level, so it's a very real issue to them. And if you look at the Dutch ports, they're very vulnerable to climate change issues. And so as part of the evaluation of infrastructure on harbor specifically, they're working very hard to incorporate carbon, environmental issues more generally into their valuation of those projects. So, I mean, there's still ways to go, but there's no question the minds at work at pension funds are looking at these issues as part of infrastructure deals now, and harbors is a fantastic example.
So, Michael, if you had lots and lots and lots of money, would you invest in Dutch harbors? Yes or no?
No.
Okay. Investment guru. Is there anyone here from the Netherlands Embassy?
Yeah, my major shareholder's Dutch, so I'm looking for a job at UNEP-FI tomorrow.
Okay, we closed down this morning, so let's do it this way. We're going to go to that second question. The gentleman, where were you? What was your name again? Mark. We're going to go to Mark's question, but then we've got a whole queue of Forrester people. I want some adrenaline in the questions, all right? Let's shoot them at people, make them sharp, quick, bang, and force the answer out. But we've got the second question resting. So, rates. Yeah. Rates, and Barbara, how is the insurance world playing with it as well? Sandra, you first.
Okay, is this on?
Is Sandra on?
Is this on?
Yeah.
Yes. So varying interest rates for environmental initiatives. Generally speaking, we don't offer special interest rates just because something is green. However, in commercial lending and in capital markets, environmental risk management is part of the industry and the transaction analysis and part of the risk rating of the both the industry and the borrower's risk rating. So there are a lot of factors that go into a borrower or sector risk rating, environment being one of many. And I guess my thinking on it is that if the environmental issue was big enough that it actually affected the risk rating, it probably would be so big that we would actually avoid the deal. And the other thing that we do related to, if you're sort of getting at incentives for environmentally preferential initiatives, they're actually in personal lending. The tact we're taking there is more towards offering clients products and services that encourage them to go green. So mutual funds, in fact, we have a partnership with Jansi, coincidentally. So mutual. Yeah, check our website. So yeah, mutual funds, energy saver mortgages. So a number of different incentives to encourage customers to look at greening their own
And are people asking for those products? Do you see that?
That's a good question. Not nearly as much as they said they would.
Okay. Okay, so that, as far as I'm concerned, is a bad mark for the audience. So that's one up for the bankers. Audience, you need to ask for more green kit. Who actually asks for green kit in your financial products? Stand up. 2, 3. That is hopeless. You should all be ashamed. That is. Sandra, you have my sympathy. Barbara, insurance world, rates.
Yep. To answer the question, there are a number of different factors that go into rating insurance, and just to go at a high level. One is your behavior, so the number of claims you have. Are you a claim-averse type of risk, or are you one who makes a lot of claims? There was a study done in the UK a couple of years ago that talked about the halo clients. So the halo clients are those who might be more green connected in terms of the type of car they buy, the type of house that they built, the renovations they do. There's not enough research yet to say that that client is actually going to bring you in fewer claims. On the other hand, I'm going to talk about LEED certified homes. When you build a home and then we go to insure it, we look at the type of construction, we look at the cost, we look at the rebuilding factors. Nobody's been able to prove that a LEED certified home is going to cost less to rebuild than a home built, say, in the 1970s. What you can say is, yes, it's going to have less greenhouse gas emissions, but is it going to be cheaper to insure? The jury's out.
Okay. The people at the microphone are now getting tired and they're hating the fact that they decided to come up there because they've been on show for about half an hour. So here's the gig, right? I arrived in Canada yesterday. I've got jet lag. And so I'm watching repeat rollover. You call it hockey here or ice hockey? So I'm looking hockey things from the 1970s. And there's the occasional body check, right? So my point is, if you're too long with your question or you make a speech, I'm behind you, I'm going to body check you, all right? It's simple. Okay, it's dead simple, all right? And so what I want is name, question, and adrenaline. Let's get through 3 questions quickly. Who are you? Get on with it.
Why are you directing this at me? I haven't even asked my question yet.
I'm just an angry
Very
Celt.
quickly, it's Don Gayton, LRH Technology for Michael. 2-part question. First of all, what returns are expected for people investing in, I'm particularly thinking about green technology, green energy. And if the rates are higher than normal, so I'd like to know the rate of return people are expecting from those investments. And secondly, are green energy investments seem to be risky? And if so, why?
Thank you.
Well, it's difficult to say what investors expect the return to be because it goes along the spectrum. So, if you're looking at venture capital or early stage, I would say an investor that's looking at that is no different than a traditional VC investor, so venture capital investor. So 25 to 35%, an exit over 3 to 5 years. But as you move along the spectrum into more traditional private equity or into the public markets, then the return spectrum would come down as the risk of that investment comes down. So why are they seen as more risky than others? Well, I think generally it happens that the renewables, clean tech companies are in the earlier stages of their development. There's not as many of them on the public markets, and we just have that's just the way the curve is skewed at this point. So, the way that large institutions are now looking at it is, I think, increasingly as an asset class, and they're starting to study the way that asset class works with the rest of their portfolio, and they're finding that a small segment of their overall portfolio, which can be billions, in fact in some cases trillions of dollars, can actually, enhance returns and mitigate risk. So, I think when you hear green technology or those types of investments are more risky, it tends to be an argument or a story that is focused on individual investors, who tend to put maybe more money in than the overall size of their portfolio would otherwise justify. So maybe that's not a clear answer, but it depends where you're investing across the spectrum. But increasingly for the institutional investor, it's an asset class now where there's larger pools of capital being allocated, within a broader portfolio strategy. So I think that idea of risk is, managing risk is slowly diminishing.